Happy New Month, everyone, and welcome back to another promising dive into our weekly series of market analysis. In today's video, we will be following up and delving into a comprehensive review of the XAUUSD chart, exploring how the recent US inflation related data will potentially impact the current market dynamics. So I do encourage us all to stay tuned in as I have enlightening ideas that you wouldn't want to miss out on as you prepare for the new week and of course the new month. During our last week trading session, we observed an extended sideways trading activities with price action confined within the $2,360 level and of course the $2,325 zone as market participants reassess the balance between the actual and perceived risk in this particular market. Now, despite this backdrop, we managed to capitalize on both the bullish and bearish sentiment within the structure, capturing over 600 pips of price movement in our favor. For a detailed breakdown of each of our entry points, you may want to check out the links right in the description box um, below this video you are watching. So, as the new month begins, fund managers and investors are expected to realign their portfolio to meet allocation targets or respond to market trends, which often leads to increased trading volumes and temporary price fluctuations at the beginning of every new month. Last week, Friday, we saw gold retraced its gains following the release of the US core PCE data, which obviously reveals that inflation is gradually cooling more quickly than analysts had expected. Now, this development here could increase the likelihood of the Fed cutting interest rates sooner than later. At this point, I would like to emphasize that lower interest rates tend to be a positive signal for safe haven for the prices of safe haven assets such as the gold. Now, given this recent developments in this market, how might the market respond once it digests the implication of the US core PCE report? Well, as always, we will be leveraging our basic tools from the economic calendar to trend lines, key levels, and chart patterns to predict potential price movements in the coming week. But before we jump into the details, a quick reminder here while we are here to learn and explore, remember that this presentation is designed for educational purposes only. And remember, Forex trading carries risk. So tread cautiously, tread carefully, and seek advice from professional financial advisor before making any investment decisions. So, with that being said, let's dive right into the business. So, our first point of contact for today is going to be on the daily time frame, where, of course, we do want to be having an holistic perspective into what is really going on in this particular market. And right here on the daily time frame, what I did was to take into consideration the character of price action since the month of February. That's an historical data of about 3 to 4 months thereabout. And it is quite obvious that the market has been very, very bullish. And to further emphasize this, I did connected the series of higher lows here, giving us a couple of ascending trend line to work with, as you will see on my screen here. And of course, you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we want to continue to look out for patterns and structures that support the idea of buying. And the only condition that will make us start considering selling is for this ascending trend line to be breached and broken to the downside. Now, if we look closer into the structure, we saw that as at the end of last week trading session, despite the significant bearish momentum since price action tested that all-time high at the $2,450 area, you will see that price action closed exactly at the point where the ascending trend line is, making it a crucial juncture in this particular market. Now, the question as we head into the new week is whether or not price action will respect this ascending trend line one more time, just like it has been doing in the last 3 to 4 months, to continue an uptrend scenario, or will price action break down the ascending trend line to incite a sell off in this particular market? Now, in addition to that ascending trend line, we need a key level that is going to be playing a significant role in guiding our decisions for next week. And from what I was able to come up with here, I saw this $2,325 area, which, as you will see, had played a significant role in determining the direction of price action since the beginning of the month of April. Now, look at this level here. You see, uh, during the first half of the month of April, it was serving as a strong demand zone, as you will see here. Then we saw a little bit of choppy market condition during the later part of the month of April, and not until the beginning of the month of May, price action climbed above the structure to that all-time high, and since that moment, price action had remained above this area, making it a robust demand zone to work with ahead of the new week. Will this become a platform for new highs, or will the structure be breached and broken to the downside? Of course, you know how we use our key levels. They also serve the same way the trend lines also play a role by looking out for buying opportunities when price remains above the key level and looking out for selling opportunities below the key level. Now, to navigate this area, what I did here was to bring out my Fibonacci retracement tool after considering the previous impulsive move to the upside, and of course looking at how far this retracement phase has gone. And of course, you will see that in the last 7 to 8 days, the market has been consolidating within our golden zone area, which is between the 50 and the 78.6% of the previous impulse leg, to emphasize the prevailing uncertainty in this particular market. Now, how are we going to navigate this current market dynamics as we prepare for the new month? Is it time to start selling, or are we going to get ready to buy one more time? To navigate this current structure, I have a simple trading setup on the 4 hours time frame. But before we go into the 4 hours time frame, as always, we do want to be keeping tabs with the fundamental factors that will be influencing the sentiment in this market. And by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and, most importantly, timing to position ourselves in such a way that we can capitalize on the next potential move. And based on the asset we are looking at, we are going to be focusing on economic features, high impactful economic features from the United States economic docket. Now, right here on the economic calendar, the first high impactful event is coming in on Monday. That's June 3rd. And we have the ISM manufacturing PMI, which is considered to be one of the leading economic indicator in the United States. Now, this index here measures the health of the manufacturing sector by surveying purchasing managers on various business activities. Then fast forward to Wednesday, June 5, we have a labor data in the form of the ADP employment change, which is a monthly economic report that provides an estimate of the change in non-farm private employment in the United States. So this is going to be giving us an insight into the health of the labor sector, where while negative figures may lead to concerns about economic slowdown, and of course, um, a positive ADP figures will indicate job growth and, of course, boost market sentiments. Now, on that same day, we are going to be looking at the ISM Services PMI, which is also an indicator that measures the performance and expectations of the services sector in the United States. Then fast forward to Friday, June 7th, we are looking at labor data in the form of the average hourly earnings, which represent the average amount earned per hour by private sector employees in the United States. And it's also considered to be a crucial labor market indicator, as a higher average hourly earnings figure are generally viewed as positive by investors and may indicate wage growth and potential inflation. Then finally, on Friday, we are going to be looking at one of the major highlights for the week, which is the non farm payroll, a key economic indicator that measures the total number of paid US workers, excluding farm, government, and non-profit organization employees. So these are the high impactful event we are going to be looking at for next week. And of course, as technical traders, we do understand that the anticipation of this event has a way of influencing the sentiment of the market ahead of this event, and we shall be seeing this reflect on the chart as price action. So, talking about price action, we scale down into the 4 hours time frame where I do have a simple trading setup to navigate this current market dynamics. Now, on the 4 hours time frame, this is what I was able to come up with. So, as you can see, the key level is still very much intact at the 2,325. As you will see, price action closed exactly at that particular point. Then, besides this, is that demand zone between the 2,325 and 2,305. And one interesting thing about this level is how it has continued to negate the attempt by sellers to break through the structure since the beginning of the month of May. Now, the question at this point is, will this robust demand zone be strong enough to negate the bearish attempts to break through, or will it serve as a platform that will incite buying opportunities for this week? Now, for me personally, I will be looking out for a situation where price action breaks out of this descending trend line to jump in any possible buying opportunity at this point. So I would like to see something like a breakout, retest of this structure for confirmation's sake to join that uptrend scenario. However, in as much as things are looking bullish at this point in time, considering the fact that price action is sitting on a robust demand zone, we cannot ignore the potentials that sellers may take over this market, considering this descending trend line here, where the breakdown of this demand zone will be all I need to continue a decline to the downside. So you will agree with me that we are at a crucial juncture in this market where that key level at the $2,325 area is going to be playing a significant role in guiding our trading decisions next week. But trust me, I will be with you in the comment section of this video to give us an update on what I think is likely going to happen after monitoring how market participants would react to this current structure during the early hours of the new week. If you have found this content helpful and useful in making your independent trading decisions for the week, I will greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you will always stay updated with the latest ideas I share and receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye. Bye.